Buying a house is probably one of the most significant financial commitments that most people shall ever make. For these people, their home is the most important asset they will ever own. It is generally accepted that home ownership represents a major achievement and milestone in anyone's life. You may have recently taken the decision to become a home owner, which is why you are watching this video. Maybe you just want to learn more about the various mortgage products offered by Ghana Home Loans before taking a decision on home ownership. Either way, the journey to home ownership begins with you deciding to buy your own house instead of continuing to rent one. Once that important first step is taken, you must start looking for a property to buy. The search must be done with great care and in a systematic manner. The offer price is often the key consideration for most people looking to buy a property. We advise that you shop around to get the best price for the location and house type. It is recommended that you also compare the price per square meter for each property. The price per square meter is the offer price divided by the total floor area. This is one way to determine whether two similar properties in the same neighborhood being sold at the same price actually offer the same value. In addition to price or price per square meter, other factors that you may wish to consider in selecting a property include location, quality of construction, size of rooms, plot size, availability of parking, proximity to your place of work, schools and other amenities, access to public utilities, and the number of years left on the lease when you buy the property. If it is an investment property, you should also inquire about rent being paid for similar properties in the area. You should also assess the potential for the property you are about to buy to appreciate in value. It is always a good idea to seek a second opinion from someone who has more experience in these matters than you do. There are several places you may choose to buy your future home from. You can buy a house from one of the many property developers currently building large gated estates across Ghana. You can engage the services of an estate agent who can in turn identify private property owners looking to sell their houses. You may have to pay a commission to your agent if you buy any of the properties they present to you. It might be an idea to even approach your landlord and offer to buy the house that you currently live in. Telling your friends and family about your search can also be a way of identifying property since they may know people with property to sell. Then again, you can consider houses for sale that are advertised in the many property-related newspapers and websites. Even though Ghana Home Loans does not build or sell houses, we do offer various channels to assist you in the search for your future home. Please explore any of these channels during your search. Our channels include the online database www.ghlpropertyfinder.com, housing fairs organized by Ghana Home Loans, mortgage clinics organized every Saturday morning at Ghana Home Loans, and various brochures and flyers placed at the Ghana Home Loans reception by developers. When you have identified a suitable property and negotiated the price with the owner, you will have to agree on payment terms and then proceed to transfer funds to the owner. Some people choose to buy property using their own savings. However, the majority of people prefer to buy property with a loan, even if they can afford to pay for it from their own savings. These people are likely to take a loan from a mortgage company, such as Ghana Home Loans, in order to buy the property and then repay the loan over time. The use of a loan to buy a house and the simultaneous use of that same house as collateral for the loan is what creates a mortgage or a home loan. Given that the cost of a house is typically much larger than an individual's monthly income, the loan has to be structured to enable the borrower to comfortably repay in monthly installments. One way of making the payment of monthly mortgage installments more manageable is to stretch the repayment period out for as long as possible, even up to 20 years. A longer repayment period results in lower monthly installments. This ensures that as a borrower, you do not have to use your entire monthly salary to service the mortgage. Even though the repayment period may be set at 20 years, you always have the option to pay the loan off earlier than that if you wish to do so. Because a loan required to buy a house typically involves a large sum of money, you shall have to provide some form of collateral to Ghana Home Loans in order to secure this loan. Ghana Home Loans shall use the property that you intend to buy as the collateral for the loan we provide to you. This is the basis on which a mortgage agreement shall be created between us. Besides the property that you are looking to buy, you do not need to provide any other additional property as collateral in order to apply for a Ghana Home Loans mortgage. When your mortgage application has been approved and you have signed all the necessary loan agreements, Ghana Home Loans shall disburse or pay the loan amounts directly to the person selling the property. If you are an existing homeowner applying for a homeowner's mortgage, then the loan shall be disbursed directly to you or to the company that you are buying goods and/or services from. Once the loan is disbursed and you have become a homeowner, you shall be required to start paying the scheduled monthly installments over an agreed repayment period. Every mortgage given by Ghana Home Loans is disbursed with the intention of it being repaid. In line with this requirement and our commitment to prudent lending, Ghana Home Loans carefully analyzes all your sources of income to ensure that we only lend you an amount we think you can comfortably repay. If you believe we have not taken into account any aspect of your income and have therefore given you less than you should qualify for, kindly draw our attention to this and we shall review your application. You may be required to provide additional information on the other sources of income that you would like us to consider. During the term of the mortgage, circumstances may change in your life that may negatively impact your finances. You could lose your job or even suffer bereavement. Nevertheless, your obligation to make the monthly repayments will remain unchanged and the mortgage must be fully paid off. As a mortgage borrower, you should therefore take this long-term obligation into account when planning your future finances. A mortgage is a long-term loan that has several standard features. Interest rates. The interest rate is the cost of your loan. The interest rate you pay on your Ghana Home Loans mortgage is the prevailing Ghana Home Loans base rate plus a margin. The Ghana Home Loans base rate is largely determined by our cost of funds and operating costs. The margin is determined by the type of mortgage product you have applied for and how risky we think of you as a borrower. When you apply for your mortgage, you should state whether you want a fixed interest rate or a variable interest rate loan. A fixed interest rate mortgage means the interest rate does not change during the entire life of the mortgage. In simple terms, this means your monthly repayment amount does not change over the life of the loan. You therefore have the certainty of knowing that for the next 20 years, you shall pay the same amount each month towards the purchase of your house. You should, however, note that if you have a dollar mortgage, due to currency depreciation, the cedi equivalent of your monthly installment could change over time even though the dollar amount remains constant. Fixed-rate mortgages are a good choice if you believe that in future, interest rates are likely to move up, since if they do, your loan will remain fixed at a lower interest rate. A variable interest rate mortgage means the interest rate used to calculate your monthly payment may change from time to time based on movements in an underlying benchmark such as the Ghana Home Loans base rate. Your monthly mortgage payment, which is linked to the interest rate, shall therefore rise and fall as the variable interest rate rises and falls. When there is going to be a change in your variable interest rate, you shall be notified by Ghana Home Loans ahead of time so that you will be aware of the new interest rate and the corresponding new monthly repayment amount. Variable rate mortgages are a good choice if you believe interest rates are heading downwards, since if they do, your repayment amounts shall reduce as the interest rates fall. However, if interest rates start to climb again, your monthly mortgage repayments shall also rise accordingly. Please consult your Ghana Home Loans analyst if you require further clarification on the choice of interest rate for your loan. Currency. You have the choice of borrowing in cedis or in foreign currencies such as US dollars. Your choice of currency should depend on the currency of your income as well as the interest rate at which each loan type is offered. For example, if you earn dollars, you may choose to take a dollar mortgage facility in order to match the currency of your income and that of your mortgage repayments. CD earners may also choose to take a dollar loan because dollar loans generally have a relatively lower interest rate. However, as a CD earner, you must be aware that if the CD depreciates, then even though your monthly dollar repayment remains unchanged, you will need more CDs to pay the same monthly dollar amount. A CD earner who takes a dollar loan faces what is called currency or foreign exchange risk. Currency or foreign exchange risk is a type of risk that arises from the potential change in the exchange rate of one currency against another. To be safe, a CD earner may choose to borrow in CDs in order to match the currency in which they earn their income with the currency of their mortgage repayments. The potential drawback in taking a CD loan is that monthly repayments would typically be higher than that for the dollar loan due to the generally higher CD interest rates. Again, the CD mortgages typically have variable interest rates, which means the interest rate charged on the loan could change significantly over time. This shall cause your monthly CD installment to change over the repayment period. Please consult your Ghana Home Loans analyst if you require further clarification on the choice of currency for your loan. Repayment period. The mortgage repayment period refers to how long you are going to use to pay back the mortgage. A Ghana Home Loans mortgage currently offers a repayment period of up to 20 years with an option for you to pay the loan off earlier if you wish. In general, as a borrower, if you consider the repayment period offered you too long, you have two choices. The first choice is for you to accept the repayment period, make the required scheduled payments, and in addition make significant lump sum prepayments from time to time. This approach will shorten the actual period you use to pay back the loan. After each significant lump sum prepayment, your principal, the loan amount still outstanding, will be reduced. You shall then have the choice of either continuing to make the same monthly payments as before and shortening the repayment period, or reducing your monthly installments and repaying over the original repayment period. You need to tell us which of these two you prefer. Furthermore, you should inform Ghana Home Loans well in advance and in writing before making each lump sum prepayment. If you fail to give the required notice period, you could pay a prepayment fee. The second option available to you is to simply request for a shorter repayment period when you initially apply for the loan. You should, however, note that for the same loan amount, the shorter the repayment period, the higher your monthly repayment amount shall be, and therefore the higher your monthly income should be in order to qualify for the loan. Please note that if you are unable to keep up with these higher payments, you could potentially default on your loan and lose your property. Ghana Home Loans expects that by the time a borrower attains 70 years, they should have fully paid back the loan. To achieve this, Ghana Home Loans in some instances shall propose a shorter repayment period for a client who has a good credit profile but is close to their retirement age. In such a situation, a loan shall be structured to ensure that the amount due is fully paid back within say 4 or 6 years, subject to all the usual credit requirements. Please contact your Ghana Home Loans analyst if you need further clarification on your choice of repayment periods, your prepayment options, and the implications of prepaying on your loan.